Okay, good morning and good afternoon, everyone, depending on where you are, and welcome to today's Lawpath webinar. My name is Joel Comerford, and I'll be your host. I'm thrilled to have you here for End of Financial Year Tax Strategy. Make the most of the end of financial year. As essential session, well, as an essential session to help you prepare, finalize, and optimize your tax position before June 30th's deadline. Forgive me, we just have so many people piling in. It's making it a bit slow. All right. So hopefully everyone who's attending has been with us over the last couple of weeks, especially because end of financial year and the end of May, we have been focusing a lot on taxes and end of financials. So for those of you who are new, thank you so much. Um, Thank you so much for attending. We do have all of our previous episodes from the previous webinars uploaded to our YouTube channel. If you just go to Lawpath on YouTube, you will find all of our previous webinars. And again, if you are new, I should also mention that we will upload the slides from today's webinar via an email, a bulk email with basically an overview of today's webinar. I will send it out to everyone. If you have some questions and you have to leave the webinar early, or if you only came in at the tail end and you wanted to get a specific question answered or a question around a topic and we had passed, then feel free to send me a message via email once I send the bulk email out, and we'll endeavor to make sure that we can get a response for you. But for those who have been with us over the past month, we've given you the tools to make tax planning work for you. And now is the time to tie off the loose ends. This is our financial year webinar for the month. This is the final one. So let's keep the momentum going. Don't hesitate to ask as many questions as possible. This is the time to get anything that you're a bit concerned about out of the way. No question's a dumb question, and certainly if there's something else bothering you related to accounting or tax, we will try to answer it if it's not necessarily related to end of financial year as well. Um, let's move into the new financial year together with a bit of clarity, support, and confidence, right? That's what we want. Now, I'm joined today by a very special guest, Timothy Quinn, our head of tax and accounting at Lawpath Tax and Advisory. Tim is a chartered accountant with over 17 years of experience, specializing in tax planning, structuring, compliance, and financial strategy. He's worked at the director level, leading tax teams and helping Australian businesses strengthen their tax positions and grow with confidence, which is hopefully what we've allowed you guys to feel throughout the last month. Now, before we jump into it, especially for those small to medium businesses who are expanding or are quite new to all of this, I have a few questions to pose to you. Have you ever, well, this is a rather arbitrary question. We all know the answer to this, but have you ever had an issue with your tax or accounting that cost you time and money? We all know the answer is yes, but I really want you to focus on the pain points around that and how long that took you to get over that issue. Have you wanted to grow your business but weren't sure how to do it in a financially suitable way? Sorry, sustainable way. Are you confident about your compliance or just hoping you've ticked all the boxes? That's the big one as well. How will you pay your new employees as you expand? Could your trust structure cause tax complications down the line? And are you truly maximizing your returns or just getting by and hoping for the best? If any of these questions struck a chord, you're not alone and you're certainly in the right place. Now, my job here at Lawpath is to communicate with businesses like yourselves day in and day out. And those questions I just posed statistically are the highest questions we're getting. So I also wanted to, I guess, establish those kind of questions with you and just let you know, especially if you are new, that these are issues that we are helping clientele deal with every day. You're not alone, and you shouldn't have to suffer in silence or at least struggle because you might be in some kind of financial rut. I'm more than happy to communicate with you guys throughout or after this. Um, just a general consultation, a call to, I guess, hear your story, and if there's anything we can provide you, then certainly I will do my best to get that organized. Now, As it is end of financial year, we also are offering exclusive discounts on our legal and tax advisory services, but only until June 30. So if you've been thinking of getting expert support through us, or if you've been putting it off and waiting for a tax return or waiting for the new financial year, certainly now is the time to do it. Our prices will be going up and we will be making changes to some of our plans. For example, with the legal advice plan, we used to have the documents and the legal advice together, but now they will be split. So if you wanted to have that, the document library plus the legal, certainly now's the time to do it. And yeah, you know what? That should be pretty much everything from me. I've rambled on long enough. Tim, go ahead and take it away.
Thank you very much, and never rambling at all. Thank you for the introduction, as usual. We don't have too much to cover today, so I'm hoping that there should be some free time for you to jump in with some questions. Obviously, a very important date coming up in the next few days. So if anything is burning at the top of your mind, even if it's not strictly covered by this topic, please feel free to put them in the chat. With that said, what are we here for today? What are those top end of financial year tax mistakes, and how do we fix them when we've made them? Let's have another look at deductions. Why not? Try and squeeze some more blood out of the stone. I'll talk to you about some ATO red flags. So, as some of you will have seen from the ATO's news press releases recently, they are getting harder and harder to dodge. If you are the sort of person that would dodge the ATO, it's going to get very much harder for you. So let's talk about the sort of things they look out for and how they can pick you up. Some best practices around there to make your end of financial year smooth. And we can even start talking about next year. It's never too soon. And of course, like I mentioned, plenty of time for Q&A today. Let's look at these mistakes. These are the big ones. And I'd say 1 and 2 are at the top of the list for a reason. Forgetting to include all of your income is a big one. The ATO knows about it. The ATO knows every trick in the book. They know that if you register your Uber under a slightly different name or you don't provide your TFN, trust me, all of these big platforms do supply all of their information to the ATO. The ATO's data matching is what we call fuzzy, in that it doesn't require perfect matches to ping you. They get you close enough and they know who you are. Some interesting points there for people that run Etsy's and what things that they would consider a hobby, potentially are going to get caught up in tax as well. Claiming your personal expenses as business deductions. I've seen all sides of this, from the most innocent, inadvertent claiming of personal expenses. It does happen, through to some pretty egregious behavior to try and get a tax deduction for your 100-inch TV, claiming it's your workplace monitor. It's not going to work. I wish it would. Failing to reconcile your accounts. This is one for any old school accountants on the line. I know there are a few. Reconciliations and regular, basically, checks of your accounts are not as common in the new cloud-based accounting software. So it's not something that you do by default. But let me talk you through why that might be helpful for you. Missing the super payment deadline, and if anyone is on this call and hasn't paid their June quarter super yet, maybe as soon as we finish at 1 p.m. Sydney time, get to paying. You might get it in under the deadline, you might not. So let's talk about that. And of course, a common tax mistake all year round, not just at end of financial year, is failing to lodge tax returns and BAS and not paying them on time. And of course, anyone who does these with me regularly will hear me keep rabbiting on about it, this failure to keep proper records. I'm not the world's best record keeper myself, so I feel for you. I do empathize. But if you keep whatever level of information you can now, your future you will thank you and will repay yourself. Let's talk about this missing income. The side hustle or the side gig, the freelancer, doing a bit of Uber Eats, driving here or there, doing these odd jobs, picking up cash in hand jobs. You might think you'll get away with it. You might. Let's be honest, if you're mowing the neighbors' lawns for $50, you're probably not in anyone's radar. But if you do it quite often, if you start going out on Airtasker mowing lawns all the time, maybe you've got a lot of cash income coming in. Maybe you're using that cash to buy lifestyle products that you wouldn't otherwise be able to afford. If your tax return looks like you earn $20,000 a year, stacking the shelves at Coles or whatever your formal job is, and your side hustle is enabling you to live a lifestyle that doesn't match up with that, the ATO will be able to find out the level of information that they can get from you. Certainly car registrations, boat registrations, things like that. They get information from insurers. They get information all over the place. And of course, there is actually the ability to dob you in. Some people do still do that. So if you're in any neighbourhood disputes, if you've got arguments about the fence line or who's supposed to mow this side, and someone suspects you, you can actually dob in a neighbour to the ATO. All of which is what I'm trying to say is this income that you're earning on the side should usually be declared in your tax return. You might think it's a hobby. There is a whole lot of case law and ATO documentation about when does a hobby become a business. It's when it feels like it. It's the vibe of it. Going back to that old test, it's the profit-making intention. Are you doing this regular work with a view to make profit, even if you're not profitable, even if you're making a loss? Are you trying to make a profit? Or are you just buying stamps and selling some of your old stamps? You know, that's really the differentiating factor. It is going to be very hard to say that you driving for Uber Eats is a hobby. That's a very unusual hobby to claim. There's always going to be an overwhelming expectation that if you're earning if you're earning income through any of those platforms, you do have to include it as your taxable income. Now, likewise, some things that people might not think of, plenty of government grants and things like that are also taxable income that have to go in. If you've been receiving Centrelink payments in terms of New Start allowance or the equivalent, the ATO will be aware of that, and they get a report from the government of how much everyone earns. That is taxable income. So make sure that you include that in there. Very, very important. The very first thing that will happen is when you try and lodge your tax return, it might say, congratulations, that's been successful. You might see that your refund is taking longer to come back into your account than you'd think if you did have a refund. That will be because a red flag has been raised in the system. Now, we'll go through how to deal with what happens there, particularly in the event of an innocent mistake like that. But the first thing that will happen is the ATO will give you a phone call. Uh, After a while of you sitting there anxiously waiting for that refund that never hits, they'll call you up and they'll say, have you included X? Did you know that Y is taxable? At that stage, if you've made an innocent mistake, it is very easily fixed. Answer honestly. They can often amend your tax return for you there and then on the phone. If not, they'll talk you through how to make the changes. Of course, if you disagree with them, you're under no pressure to do so. You should talk to an accountant about how to take that disagreement further. But if it's an innocent mistake, you've just forgotten your online Westpac bank interest, you've forgot you even had that saving account, that's an easy fix to make. Incorrect deductions is a bit trickier. There's a lot of subjective decisions to be made, and there's a lot of line ball to grey cases that aren't really clear about when a deduction is personal and when it is related to your work or to your business. Some of the ones that we see creeping into accounts all the time, and I've got a great client list here at Lawpath, and they're all very honest people. These things just slip in. It's the nature of the beast, particularly when you're running a small business. It's hard to keep everything on its own track. But we'll see things like groceries pop in. Certainly personal travel pops in. Clothing less so, but for certain clients, clothing, the old one always comes up with, well, I only own this suit because I have to go into work. I would never own a suit if it wasn't that I had to go into an office and sit there in my beautiful suit. Too bad, the ATO says. It's not about what you do use it for, it's what you could use it for. So when it comes to clothing, some clothing is deductible. If it's going to be safety clothing, if it's going to be an identifiable uniform, and they say that your suit, however nice it is not a uniform. It is private clothing. In particular, food purchases, particularly when you're taking people out to lunch, the lines get blurred. It's very important to keep records of who goes to these lunches if you're trying to say they're business related, because you'll also have fringe benefits tax to talk about, and we won't go into that, but there is The answer to all of these issues is always going to be record keeping and talking to an accountant. Accountants don't mind if you give them a list of deductions. And if you tell them, actually, look, some of these might be part personal. Better to ask and have the accountant say no than to never ask and leave it there on the table. So certainly our team here at Lawpath, we know what's deductible and what's not. We're very happy for you to throw a list at us and see what sticks. That's our approach. We don't like working some of your larger high street accounting firms that specialize in just doing very cheap tax returns. They don't want to hear about it. We're happy to go through and sort that through you. When we have those grey cases, this idea of apportionment is really important. If you can say that, look, I've got a home internet connection. I work from home 3 days a week. I need a high quality broadband connection in order to do my work and run webinars for Lawpath as an example. The ATO will say, okay, a part of your internet use is going to be deductible. It's going to be related to your work. But a part of it is just because you like to have a nice connection to Netflix, to stream World War II documentaries or whatever it is that floats your boat. How do you have a clear method of calculating that split? I don't know. It's quite difficult. The ATO recognizes it's quite difficult. Have a method that makes sense. If you say, well, maybe I think that half of my internet use is related to Netflix and maybe half of it is work, go 50-50. They don't expect you to go into the server logs and work it out exactly. They just expect you to have a reasonable basis. There are things that are lifestyle expenses that lots of people do try and claim. Gym memberships, I know certainly at Lawpath, we've got a whole bunch of very fit people, ladies and gentlemen, that take care of themselves and take pride in themselves. And they might think that that's part of their work because it's part of their presentation and all the rest. It's part of their work ethos. The ATO again will say, no, thank you very much. There are very limited professions where that will be deductible. Funnily enough, of course, personal trainers, if they are paying for things in relation to that, professional athletes can also claim that. But again, there's this idea of this direct connection between what you're incurring as an expense and the generation of your income. If you can't make a really strong case there, don't bother to claim it. When we talk personal development there, you'd be surprised. It's harder than you'd think to claim training and education expenses as deductible. It's not enough just to say, this will be good for me in the future. You need to be able to point to a necessary nexus of this will help me in my current role, improving my salary. A lot of people get caught out when they do very expensive MBA programs and saying, well, it will help me earn more money. And the ATO will say, well, maybe this course, and this course will, but does the whole program necessarily relate to what you're doing? Again, it's that idea of apportionment. They expect you to go through it with a fine tooth comb. So again, the fix here is, look, if you've made a mistake, if your accountant has made the mistake as well of letting this through, it's never too late to amend a tax return. We do go through that later in this webinar. We can tell you how to fix up these innocent mistakes. In terms of the order of how to fix things, best to fix it yourself before anyone asks. Second best, if the ATO asks and they're right, then fix it yourself. Third, fourth, fifth, as you get more and more into the audit process, it becomes more costly to fix mistakes. If you fix mistakes quickly and they're innocent, you will have no fines attached. You are unlikely to have interest payable, anything like that. If you're trying to obfuscate and hide your mistakes and trying to fight these, even though they've got you back to rights, they will start to fine you for trying to lodge false claims. So get on top of it early. Late super. Look, late super, when we say it's a mistake, you're still going to get the tax deduction for paying super. And when I say late, pardon me, I should be very cautious here. Paying it after 30th of June. If you pay your June quarter super on July the 15th, well within the timelines to pay super on time, July 15th, you will still get a deduction for it. But the issue is you won't get a deduction until your 2026 tax return. Now that's ages away. You are not going to get the benefit of paying that super for 12 months plus. Much, much better, pay it now. And again, when I say pay it now, hopefully pay it a little bit earlier this week, but do pay it now if you haven't already. If it gets received by the super fund, so not just paid by your business, it will be tax deductible for you this year. So we like to bring forward deductions. So if you can, if you've got the cash just sitting there, pay your super and pay it today. Likewise, through a clearinghouse can actually take a little bit longer. It can take a few days, and paying it on the 30th will definitely not get it done on time. Paying it today might get it done on time. Now, when we talk about these late BAS and tax returns attracting penalties and interest, they always have done. The ATO used to be quite, what's the nice way of saying uh, weak on this? They weren't weak. They were forgiving. The ATO used to be very forgiving and used to maybe give you a slap on the wrist, didn't impose these fines and these interests. That has rapidly dried up, that goodwill. The ATO will fine you and they will impose interest once you're on their radar as a late lodger and a late payer. Even worse, starting from the 1st of July, so next week, that interest will not be tax deductible. Now, that is a big change. You used to at least get the benefit of a tax deduction when you paid that interest. That has gone out the window. The ATO has said, or the government has said, we don't want to reward people that pay their tax late. Therefore, we won't give you a deduction. Now, with the interest rate already around the 10, 11% rate that the ATO will charge, when you add to the fact that that's not tax deductible, your effective interest rate is about 15%. So that's a very expensive mistake. And those interest amounts do accrue very quickly. They add up. So, like I always say, the best time to lodge and pay is on time, and the second best time is today. So don't be one of those people that buries their heads in the sand and thinks the issues will go away. The ATO is chasing what they used to call historic debts. They even used to write a letter to you saying, we know it's there and we're not going to chase it, but we reserve the rights to chase it in the future. They are exercising those rights today. I get letters all the time, and they can be very old debts. So just get on top of it as soon as possible. And so, yeah, the fix there is definitely to engage an expert that knows what they're doing here. A lot of people just think, again, burying the head in the sand problem will go away. It won't. The first thing that we do when we take on clients with outstanding stuff is we talk. We actually get onto the ATO. We say, just so you know, so and so, we know they've got tax issues. They have engaged us. They've made a positive step to engage an accountant that is proactive. We are now handling that issue. Can you give us a few weeks to get them sorted? I've never had a contact at the ATO say no. They always say, that's good to hear. We'll leave a file note and we'll do what's called a non-action note for the next couple of weeks to give you a bit of time. So when you engage a quality tax agent with a good reputation and good standing with the ATO, they can help you. Poor record keeping is just, again, it's end of financial year. I think poor record keeping is a year-round problem that really becomes evident around end of financial year. It becomes really evident when you push it over to your accountant, who looks at you with fear and sadness because they don't want to see your shoebox of dodgy records. We say at the top, no receipts equals no deduction. It's not strictly true, but it's close enough to being true that you may as well treat it as gospel. There are some ways that you can make a constructive receipt. Don't go down that path. Just keep those records. The paper only records. If you've checked your wallet, we pursed recently, and you've stashed away this big pile of receipts from everything, and you haven't looked at them for a while, that ink has probably faded. I couldn't believe it. I actually went to do my own reimbursements from the other day, and I think I'm going to be on the hook for a few of them personally because those ink on those paper receipts fades really, really quickly, and you forget what they were there for. Much easier. Get your phone out. When you get the receipt, take a photo. It's there and it's done and dusted. Store it in the way that works for you. Now, Xero and systems like that will have add-ons like Expensify that will help you keep those receipts. They're great. Go for that. If you don't do that, at least take a photo on your phone, store it in a Google Drive or whatever your folder of choice is. Just keep it digitally and just keep a quick note of what it is. Just even a naming convention, just explain what it is. Perfection is not what we're going for here, but like we say there on some of the examples, just a bit of chat about what it was while you remember, because you're not going to remember in 2 years' time. And look, just if you're the sort of person that runs by a calendar, set aside 30 minutes or an hour once a month, sort out your records. That hour a month is going to turn into 20, 30, 40 hours if you're trying to do it once a year. So much better just to do it there. Do it consistently, I guess. That's when you see people in a panic and a flurry around end of financial year, it's because they're not consistent. If you're consistent throughout the year, all end of financial year means is that JB Hi-Fi drops their prices and you get to go in and buy some cool stuff. It's not really, it's not actually a hassle for people that are consistent throughout the year. We've already hinted at some of this already, but how do we fix these errors when they arise? Because they do arise and no one is perfect. I guess the first step is identify what you've actually done wrong. So it sounds simple, right? If you haven't reconciled your books for ages and something doesn't feel right, you look at your P&L, your cost of sales is negative, you are going to struggle to actually work out what it relates to, particularly if you're doing this yourself and you're not an expert and you don't know the nuts and bolts of accounting that we're taught as first year students in this. Do your best. Look into it. In Xero and the like, you can trace transactions. If you find something that looks funny, if you find a balance that looks wrong, click on the balance, see where that takes you. Might give you a whole list of transactions that look funny. Click on that, see what's wrong. If things are doubled up, are you getting information from two sources? Are you getting a bank feed in that's reconciling everything from the bank and also doing Shopify feed in as well? So you won't be double counting your income. Things like that. Again, much easier with an accountant, but give it a crack yourself as well. Because until you understand what that mistake is, you'll be at a loss trying to fix it. And you might become one of those head in the sand people. Second step is when you do identify it or your accountant does, update your bookkeeping records first. So before you go and try and tell anything to the ATO, you're creating like a line of custody. You're saying in any decent accounting software, it'll show, well, this is what the transaction was recorded at the time. This is what it's been updated to. If worst comes to the worst, you're ever audited and you sat down with an ATO officer and they say, let's have a look at your Xero file. You can show them that. You can show them what the mistake was, how it was made, and that you've gone in to fix it. And that'll be a new source of truth when you update your accounting, your tax lodgements that can support that. So really important to make sure that you do put through those adjustments in your records. If you have already submitted, it's not the end of the world. It's actually very, very simple and straightforward to lodge an amended BAS or an amended tax return. You've got a bit of time to do it. Can't remember off the top of my head. 4 years is ringing a bell from the initial date of lodgement time. Often you can do them online yourself. You can just go in and find what you've lodged and click amend if we're talking about a BAS. Certainly from an annual tax statement position, it's very easy in our software on the back end as an accountant to just lodge an amended 2023 tax return. We do it all the time. And invariably, actually, they don't even get looked at. So we do have this system of self-reporting in Australia where the ATO will take your word for it until they have a reason not to. So often when we're talking about fixing errors, these are errors that the ATO has never been aware of and that we fix and amend with the ATO being, again, still unaware of it in terms of a human awareness. It's very much all in the background. I do recommend, just to follow up on that point, that if the error is complex, don't try and fix it yourself. If it's material, by which I mean if it's going to make a significant impact to that return, do get an accountant to fix it. They'll be able to advise, because lodging your own amendments and fixing up small errors is one thing. When it's a bigger issue, I do recommend getting a bit of professional involvement. And again, I've made this point, act quickly, sooner the better. It is, and at the lower level of ATO interaction with you, the better as well. Seems obvious, but we do forget that the ATO agents are humans, and if they feel like they're being taken for a ride, they're more inclined to throw the book at you. If you've shown a history of it's an innocent mistake, I've tried to fix it, that's going to put you in good stead. Let's talk about these red flags. These red flags, they're getting bigger and redder. Is that the way you describe it? There's more of them, certainly. and they're getting cleverer at picking up things that should trigger audits. I wouldn't say there's necessarily more audits, by the way. I'd say they're more focused and at a broader range of taxpayers as well. The sort of things that they're looking out for are large or unusual deductions. Large speaks for itself. Unusual can mean in labels in your tax return where they previously haven't been deductions, or labels that they wouldn't expect for someone in your area of business to use. If your business is running a digital online e-commerce marketplace, and suddenly out of nowhere you started claiming big travel expenses, big motor vehicle expenses, that's unusual in the context. It's not unusual in the context of someone that's a traveling salesperson or anything like that, but it's unusual in the context of your business. So that's something that will pop up. The ATO publishes once a year this very interesting data set which breaks down business by size in terms of revenue, some common metrics like level of deductions, profit levels per business, and by type of business as well. And they provide that for two reasons. One, it's interesting for people that like to have a look, but two, and most importantly, they're letting you know that they know what businesses are like in Australia. And they know that when you lodge a tax return as a business in that particular category of business, if you're very different, you maybe deserve a second look. So it's not to say that you have to pick the average amount of deductions for each business. It's not that at all. But it is just to be aware of if you're way outside the boundaries, you should expect to have a look. Why have we said that multiple years of business losses flag a review? It can suggest that you're basically running a non-commercial business. There are non-commercial losses out there, loss rules, pardon me, out there that will say if you've got income in one hand from a job or from whatever else it is, and you're running a business that's running consistent losses, and you're trying to claim deductions from those losses against your other income, they might be saying, and going back to our first point, is this a business or is it a hobby that you're trying to get a tax deduction for? You might think there's a necessary thing that says, well, if you've been running a business for multiple years at a loss, why are you still running it? Maybe you should have given up the game. So that might be a flag that potentially there's personal expenses being caught up into that business. We talked again about the lifestyle not matching that income, so I won't go over that again. GST discrepancies. The number of people that don't think to check this. When I say people, I'm not talking about clients. I'm talking about accountants. If you're lodging a tax return that's claiming $100,000 of income, you've already claimed four BASs, four quarterly BASs that say that your income is 400,000. Well, there's an obvious discrepancy there. Which one's right? Have you just thought you'd be clever when you're lodging your year-end tax return, underreport your income? It's going to stick out like a sore thumb. So the ATO definitely be cross-checking your BASs, business activity statements, with your year-end tax returns. Another thing that obviously puts you on the hook for a bit of a look is lodging late frequently and frequent amendments. If you're amending every return 5 times, it suggests a lack of care and attention, and it suggests that, well, why is amendment number 6 going to be necessarily better than version number 2? You could be all over the place. And if you're late again, it shows a lack of care and diligence, I guess, with your tax affairs. So how do we stay off the radar? We lodge on time, pay on time if possible, and if not, we certainly engage and put payment arrangements in place. Keeping your clear digital records. Well, how does the ATO know that, you might ask? An ATO audit doesn't start with 4 officers shining a light in your eyes and starting to get out the electrical cables and start to get threatening. That's not how ATO audits work. ATO audits work, it starts with a phone call or a letter. They'll ask the question. If you can answer that question with, it's this, and I've got the records, would you like me to send you a screenshot? Would you like me to send you a PDF? If you can do that, that's the end. The ATO is really happy with those sorts of audits. They're quick, easy interventions, and they're quickly, easily solved. You can only do that with clear digital records. If you have to go through a shoebox and go through a weeks-long process to find the record, even if you're in the right, it's going to put them on edge. So keeping your clear digital records is going to resolve your issues quickly. avoid aggressive deductions. When we're talking about that idea of apportionment, splitting between business and personal use for plenty of legitimate deductions, if you are trying to tell me that 99% of your home broadband use is for your business and you're on the gigabyte plan or whatever it is, and that only 1% of it is home use, I'm going to tell you you need to look at your method of calculation. That is extremely aggressive and it will stick out. And again, get professional advice. Don't think that you're going to know how to answer all of these questions. There's a reason that we're good at this. We've been doing this for a number of years and decades. And our team at Lawpath is incredibly experienced in this area. If we're talking best practices, we're not talking things that you have to do. We're talking things that will help you, and I recommend them to you. But again, it's really what works for your business. You can pick and choose. Pick and choose what works for you. Everyone works differently. Just avoiding this last minute lodgement stress. When I get people that say, this lodgement is due tomorrow, it needs to be done tomorrow, I have to be upfront and say, I can't do it in time, and I'm not going to rush to get an answer. I'm not going to take the risk of making mistakes just to hit a deadline. We've got to be structured about this. We've got to be calm. So the earlier you start working on your records, the best chance you're going to have of making them accurate on your first pass and not have to amend them. Using digital calendars is great. Setting your recurring reminders, when they're all due, and we'll run you through the due dates in a minute. And again, just remembering to pay the super as early as you can, for subject to your cash flow constraints. But again, a very good practice. If you've got an accountant that's on a subscription model where they do your 4 BASs and your tax return, like Lawpath, they'll be reaching out to you. So you maybe don't have to worry about that step so much. These are the due dates. Some of these are already well and truly gone, other than Q4. They'll be roughly the same next year. So for all of those BASs, it's always due by 28th the following month, except for the nice Christmas break the ATO gives us, which gives us till the 28th of Feb. And of course, if you're a BAS agent or a tax agent like Lawpath is, then you get a few extra weeks on top of that. So you get a bit of extra time if you're using a tax agent, which is very kind of them. Thank the ATO for their benevolence there. A best practice that again has died off a little bit with these youths these days, these modern day accountants and these modern day accounting practices, the idea of the reconciliation. Now, what is a reconciliation? At its most basic, it's matching transactions in Xero. It's saying this amount of money coming in is related to this invoice, things like that. But a really thorough reconciliation looks at something you wouldn't necessarily look at, your balance sheet, something like that. If you've got provisions in there, liabilities that you're looking at, and you haven't checked them for a while, they can get a habit of getting stale. There are transactions that you might need to do in the background that are non-cash transactions that are not getting caught up, and it's not giving you an accurate view of your business. A really easy one is annual leave. You might think that your business is doing really well because you've got cash in the accounts, your profit and loss is doing really well, and then your long-standing, long-suffering employee comes to you, hasn't taken a holiday in 5 years, and say, "Well, I'd like to take 20 weeks of annual leave. Thanks very much." You haven't got a liability on your balance sheet because you haven't been reconciling regularly, and you haven't been capturing that. Well, then that's going to really hit your cash balance, having to pay that out with no one there to do the work. So things like just this, the idea of paying attention to your books once a month will keep you clean, particularly for those of you that are looking out there to maybe sell your business. The more frequently you reconcile these accounts, the more ready to go you are when someone's looking at your business to buy it. It's going to make a transaction much smoother. Keeping digital receipts, we've gone through already, but again, just speed. You will forget things so quickly. Do it as you think about it. Clean it up later, but take enough notes to get you moving as you're doing it. And again, you're just checking in with your accountants. If you say, "Oh, I've got an accountant," but what that means is that once a year on the 15th of May, they lodge my tax return for last year, and that's all I talk to them about. And well, for a start, that's too late to really fix your tax affairs. It's You need to be talking to them before the tax is due if you want to actually improve your tax position. So when I say get quarterly check-in, check in as regularly as you need, but have someone that's there on a subscription basis. Do talk to your accountants, but we like subscription models, obviously, because then there's no surprises. You're not going to get a surprise bill at the end of the month. Accountants are hardworking people and they deserve to be paid. But if you're a small business person that gets a surprise bill that you didn't expect, it can hurt you. So getting the idea that your bills are locked in, you know how much you pay, and that you are able to talk to your accountant is a really good model for a lot of small businesses because we can identify opportunities, we can help you with questions as they arise. And we're not just looking at it historically and saying, gee, I wish I'd known that at the time. Just quickly before I hand you back to Joel and maybe open up the floor of questions, how does Lawpath like to help around year end? It's a busy time for us, as you might imagine. We've been offering our tailored tax planning reports. These are really detailed reports that go into not just your business, but your personal, your family, financial affairs. And we look at what would I do if I was in this position? What are transactions I can undertake now? What are structures I can put in place now in order to maximize my taxable position? Really good time to do that. There are some things that can only be done before year end. There are some things that are too late to fix in July. We try and fix them in June. Now, the way that we help around end of financial year, we are your compliance agents. We run that process. When I said earlier, hey, isn't it great to put all of your due date? Don't bother. If you've got Lawpath sorting you out throughout the year, we'll be the ones chasing you to do your BAS and your tax returns and helping you out with your record keeping. It's not going to be we'll need you to respond to us. We need you to get on a call, but we'll be the ones that'll drive that process. The accounting advice plan, which Joel will talk to you about as one of our offerings, is a fantastic one. And we're certainly getting hammered with lots of calls on that advice line at the moment because with these particular plans, again, no surprises, no hourly rates, you can get support for those questions that do pop up around year end and we'll help you out. And of course, once you're on the Lawpath platform, we're in a great place to offer assistance to fix up your outstanding or incorrect lodgements from before. Just some of the pretty faces involved in our team. We've been growing this team pretty rapidly. We've got a great team of supporting accountants that cover everything you could possibly think of. If you've got a question for us, we've got someone that can answer it for you. So for any of you that are customers of ours, maybe you haven't seen some of these people before, you can put a face to the name. And our good friend Chris, if he's listening in on the webinar, is just recently welcomed his first child with his wife. So congratulations to Chris if you're listening in on that. Over to Joel to talk about some plans and some great end of financial year discounts.
Thank you so much, Tim. I just had a quick question. I hope you can answer this. Does the ATO have a headquarters somewhere? Is it in one spot like Quantico and Virginia, like the FBI, or are they spread out everywhere else?
They are all over the place these days. They've got big ones down in Albury, Wodonga. They got out in Penrith. They got a big one. Every state every state and territory they've got a presence, and certainly they've got some big factories of really finely tuned tax minds trying to protect the general revenue.
Did they um did they ever try to reach out to you at some stage?
In a good way or a bad way? I mean, I get reached out to them to answer questions, but no, I must admit I've never been headhunted by the ATO. I'll await the call. I'll await the bat signal from the commissioner.
Thanks, mate. Um, so yes, everyone, thank you so much for your for sitting through this. As we did say, we have a Q&A section that we're about to lead into in the moment. So please go ahead and churn your questions out. And Hawley, we did see your question there, and we will jump on that shortly. But in regards to our plans, so essentially here at Lawpath, we want you to feel comfortable about your business's legal and financial security. And we understand that that is easier said than done. But at the end of the day, we are here. so that you can operate with confidence and clarity. If anything goes wrong, or if you hit a gray area in your contracts, business or legal related, or just accounting in general, you can jump on a call with us immediately and get that kind of support as opposed to having to wait or book a time in. Now, do you want to get a response from an accountant and pay full price for something that may take 2 minutes to get an answer? Or would you prefer to have an unlimited call option with us whenever you need? You can engage with one of our lawyers, or one of our accountants. Sorry, you can engage with one of our accountants who will help you organize your tax planning strategy whenever you need as well, especially in these late stages of end of financial year. If you are a bit unsure, if you feel like there could be better options in which you can take your business in the new financial year, as Tim mentioned, the phones are burning at the moment with the amount of people calling, but certainly we could find time for anyone who needs it last minute. So, what are our plans to the uninitiated? With the accounting advice plan, you will be paired with a senior accountant. Now, I should make this clear for anyone who is new. You won't be speaking to someone new each time. If you do like the lawyer or accountant or tax agent you're speaking with, you can communicate with them to book times around either your availability or their availability, so you can always have the same person to communicate with. Now, if you're new to running a business, and you don't have a lot of income at this time, naturally you don't want to be paying an accountant in regards to bookkeeping to do work that you could essentially do by yourself. So this is why we have paired with Xero and Myob, so you can get on these accounting softwares and kind of learn how to do your own payroll and invoicing, etc. But naturally, there is still going to be some areas of confusion. So what we do is we provide you with an accountant, unlimited 30-minute calls per day, Monday to Friday for 12 months. So you can hop on that call with them and say, first of all, help me set up my Xero profile, and then also teach me the early stages of how to report accurately. And then once you build more confidence, it will become a maybe once a week or maybe twice a month where you will have the accountant hop on a call with you and just overshadow your bookkeeping. And then we also offer a lot of information around business structuring as well. So, how much did you do um, last month? How much did you do last quarter? What trouble areas have you had in the past in regards to claiming taxes and benefits of that nature? And we can have those conversations with you. So, we like to be a little bit more thorough. I'm sure Tim can explain these services a lot better than me, but yeah, it's peace of mind and it's time saving and it's money saving as well. Now, with the tax plan, it's not so much DIY, it's very much us doing everything for you. We will do your BAS statements, we will do your tax return, we will do your end of financial year reporting. We also offer to do your personal tax return for an extra fee as well. But with this, you can, well, Tim, maybe I can pose a question to you. In regards to the tax compliance, would you usually recommend the client sits through those BAS and tax calls with you, or are you guys just happy to do it autonomously?
Uh, Unless there's a dying need for you to learn how to do a BAS or a tax return, I'd leave it to the experts. What we do is, of course, your books are your own, your records are your own, and you know your business better than us. So when we do those BASs under the tax compliance plan, we say, are you ready for us to look at your books? As soon as you're ready, we'll go through them. We review them line by line. We'll pick up what we're happy with, and we'll pick up the errors or that we think are errors. What we'll do is we'll reach out to you as a result of that and say, let's clarify this, and this. We think it's actually should be treated this way. Can you answer a couple of questions? Oh, yeah, it is. It's fine. Fantastic. We'll actually explain to you. We'll help teach you. Actually, there's no GST on this transaction because we'll fix it for you. We'll lodge the BAS. We don't expect you to do anything like that once you've approved it, but certainly we'll help you improve the quality of your record keeping by explaining to you why we're making amendments before we just lob them at the ATO.
Perfect. Thank you, Tim. I I can say comfortably that I have never run a business before. I've never had the desire to run a business, but speaking with people like yourself day in and day out, I can say you have my utmost respect. The challenges that you face, not only in the early stages, but throughout, and even at the stage when you are really ready to sell your business, is I certainly don't envy the position of a sole trader or a company owner, but what I can say is if I did start a new business, I would want to know how my business is performing because it's exciting. You have a pet project. You have this thing is this business of yours is your baby. It's your idea. It belongs to you, and you want to nurture it and help it grow. So, but it's also there's very exciting elements because if it is something original, if it's your idea, whether it's an app or something else along those lines, you want to see that people like your ideas. It's there's somewhat of an ego element involved there, but it's justified because if you can bring something different to society, humanity, if you can assist people in a way in which no one's really touched on before, then that's wonderful. That's great. Who could ever try to put you down for wanting to enrich humans' existence? So if you would like to have that kind of overview whenever you want. If you just want to check in whenever, if you're really strategic in the early stages, you want and you know your business is going to increase, accounting advice plan and tax is perfect. If you just want to go at your own pace and slowly build up money over time and build your brand out, still accounting and tax would benefit you. No matter what stage you are, no matter how small you are, I don't care if you're selling candles online, you can benefit from the accounting and tax, and there's always going to be something that we can assist you with. So keep in mind you have until Monday to jump on some of these plans. We have bundle options as well. All of our plans are tax deductible. And certainly we can go ahead and book you in consultations immediately as opposed to having to wait 6 or 7 days to jump on any kind of advice. Again, I will send the email out with all this information for you guys to observe later on. But for now, we will jump into the Q&A. If you guys did come late, please, you can either pose questions in the chat box like Sandra, or you can go ahead and pose questions in the Q&A, whichever we will get to those now. Thank you so much.
Thank you. Only a few questions in the chat yet, so they'll be nice and easy to deal with. And commiserations, obviously, requiring laser treatment on your eyes. Unfortunately, no, that's not tax deductible. And I say without being able to offer specific advice, but in general, if you just have a medical issue, even though you might say, well, it's required, I can't work with my eyes shut, they are still going to say that that is a personal expense and it's not deductible. Unfortunately, Marina has made some good comments there saying, talking about the complexities of using apportion methods or any of their methods to talk about that. Yes, I think there is a recognition there that no method is purchased with electricity as with internet use. How can you really claim that a certain proportion is related to work and a certain proportion is related to personal? You can't. You just do your best. And that's why you see a lot of people just do 50-50 because they're just plucking a number out of the out of the air. Sandra's asked about tax planning strategy. Is it for June or for July, or is it for current financial year? Tax planning is all year round. I love to do tax planning in July for the year ahead. Tax planning, when you're doing it in June for that year, Sandra, is really when if you haven't done tax planning properly throughout the rest of the year, there are still things you can fix in June for that year. So it's really for how do I fix up 11 months of no strategy in this month? But certainly you can get on board to do June tax planning still now. We've still got a few days, but no reason you can't do tax planning in July for the year ahead for FY26. It's a great time to do tax planning when it's front of mind, Sandra. So thank you for your question there. Alexia has asked regarding paying super, do you have to put the money in super after you lodge the intent to claim? Yeah, I would. I would put it in straight away. I'd give them the intention to claim form. I would put the money in and then expect that confirmation of the intention to claim to come back as well. And then I think an AI is just giving me a summary for someone to remind someone to pay the super, which I think is fantastic. Jimmy, and again, I was trying to clarify this, but maybe I didn't make the point clear. If you haven't paid your employees super before the 30th, that is fine. It'll just be deductible for you next year instead of this year. So as long as you're paying your super by the 28th, whatever the deadline is, of July, that's fine. It's just about when it's going to be tax deductible. So Jimmy, you're not in any trouble or anything. It's purely just if you could prepay this June quarter super now, you'll get the deduction this year. If you paid in the normal time around middle of July, you'll get the deduction next year.
I might just add in that we've just had Albert Price jump on board to your tax team as a tax client. So, Albert, welcome aboard. I will give you a call after this just to introduce you to the team, and we look forward to taking care of your numbers.
Nice to meet you, Albert. Looking forward to it. Sandra's asked, I love a curiosity question. Would the ATO audit past financial years, even if the current financial year lodgements are fine? Yes. So they're able to go back at least 4 years for any reason that they see fit. They can go back more than 4 years if they suspect deliberate fraud. So even if this year's tax return is fine, they can absolutely go back. And as they're getting more data, some of that data is historical, they are doing resweeps. Don't think that just because you lodged your 2021 tax return and nothing happened, that that's closed off. It can get looked at. Good question, Sandra. Alexia, if you've forgotten to lodge your BAS for the last 2 years, how do you lodge them? You're not alone, so don't panic. Plenty of people do that. You can still go in, if you're doing your own BAS, you can still go into, if you're using the ATO's online services business, you can prepare your own BAS. Alexia, I would recommend you go to an accountant. We would be happy to talk to you. We very, very commonly will do catch-up work for BASs. We don't do it at a point where we're trying to make a profit. We're actually just trying to get people caught up. It's part of our business model, and that smoothly running businesses are good for us as they are for you. So we'll help you get caught up with those BAS statements. We'll give you a very lean quote for that, Alexia. Do feel free just to add to the chat. Anyone else that's still got a burning question, still got you for a little bit longer?
Does anyone have any bookkeeping inquiries, potentially around paying employees, anything along those lines? Anything,
We had a
anything?
question, do we help setting up businesses? I think we're probably one of the biggest in the country in terms of setting up businesses. I think we've set up 500,000, something like that, since we started. We're shooting for 1 million. That's the near-term gain. So, Alexia, yes, we'll have someone reach out to you. We can help you set up with an ABN, or we can set you up with a company so we can incorporate you. And Sandra said, and trusts and corporate trustees, yes, we can do them as well. Any structure under the sun, we can help you set up. And certainly, if you were to come on board and you were to register your business or your company with Lawpath and also become a Lawpath tax customer, then and we can also do asset compliance. So basically end to end, basically everything you need to run a business in Australia, we can help with.
One of my main duties here is to register companies for clients as well as ABNs. So we do not do company registrations for clients, but I do offer a service where I can naturally hop on a call with you, determine what you need, and if you are interested in registering a company with us, I will hop on a call and walk you through the entire company registration. And this is available for anyone. Now, naturally, you want to make sure that you have all the shareholders' information in place and you understand your share structure. But naturally, we can converse about that stuff as well. And for anyone who is interested, I am in the planning phase for running some webinars throughout the week where I will actually walk people through company registration. We have discussions around the differences between ABNs and ACNs and why is one better than the other, etc. So please stay tuned for that. But for now, Alexia, I would love to give you a call after this just to see where your plans are in motion and how we can assist. Thanks.